All right, 50 seconds to retail sales data. Let's go through the expectations again. Retail sales data is expected to come in at negative 0.2% on the advanced month over month. We are looking for that to plummet from last month's hot retail sales data of 0.4%. Excluding autos, we're expecting to go from 0.4% to 0.1%. Excluding auto and gas, we're expecting to go 0.6 to 0.2%. And in the control group, we're expecting to go from 0.7 to 0.2%. We're also going to be getting import prices. Import prices expecting to go from 0.4% to negative 0.5% month over month. Excluding petroleum, negative 0.1%, year over year, negative 5.6%. All pretty deflationary figures here. And okay, retail sales, oh crap, comes in hot. Retail sales advanced month over month comes in, all of them come in almost hot. Advanced month over month comes in at 0.3. Well, there you go. That reiterates a Fed potential move. X auto does match at 0.1. X auto and gas comes in at 0.4. Two out of three of those well above the survey. Import prices did come in lower though. Import prices coming in at 0.6 versus 0.5. Import prices, excluding petroleum, coming in at negative 0.2 versus negative 0.1. Import prices year over year coming in at negative 5.9 versus the 5.6 expected. Export prices coming in at negative 1.9 versus 0.1 expected. And then export prices year over year coming in at negative 10.1%. Initial jobless claims just came in at 262,000. That's above the survey of 245,000, but it is roughly in line with the 262 revision of last month, last week. These are weekly numbers. Continuing claims coming in at 1775, slightly above expectations. So jobless claims and continuing claims slightly above expectations. Retail sales coming in hot, and import-export prices coming in soft. So it really reiterates that the rest of the world is suffering a little bit more than the United States, with the United States data coming in here hotter than expected, especially with this warmer retail sales report, again coming in at positive 0.3 versus the negative 0.2 that was expected for retail sales. So another bit of hawkish news there. We could take a brief, no, CNBC is really just going to be reiterating the numbers that we have right here. So let's go into the actual monthly retail sales report and see if we can get the data. Advanced monthly retail sales. Yep, we have them here. Okay, let me get the full PDF of this, 7 pages long, so we can go through the actual retail sales report together. Now we're going to do that in just about 5 seconds here. While we wait for that, keep in mind we have a price increase for those courses on building your wealth. Phase 1 starting tomorrow. You can see all 4 phases on screen right now, with the price increase starting this Friday, and then the largest price increases by phase 4. These are all cumulative, so they'll keep going up. These will all add together, and that's because we're adding new lectures to all of the courses listed here over time, with the first next batch coming out for real estate investing in stocks and psych and the productivity course. So let's now jump on over to what we have for the retail sales report. Retail sales report is right here. And let's see what the report says. This is from the US Census Bureau. The report came in plus 0.3%, hotter than the expectation, but a little softer than last month. Total sales from March through May were up 1.7%. Fine, that's the quarter. Okay, we want to know the monthly data though. Let's get into some of the monthly data and let's see where the hotness is coming from. So here's the chart on the, it's a little difficult to see exactly where we want to be. We want to be here, May adjusted 2023. So we want to be in the column here. We do want to be at the percent change though. So let's go to the preliminary percent change. And let's go to the April chart. Let's use this chart, May from April. So we're looking at the May number from April, and this is going to give us a month-over-month indication of where some of that heat came from. Oopsies, that was yesterday's report. Let's go here. There we go. Motor vehicle and part dealers actually came up 1.4%. I believe this was expected to be negative. You had furniture and home stores coming in at 0.4%. Yeah, it had to have been expected to be negative because When you get the excluding motor vehicle and parts, you actually get a smaller number than the headline number. So, in other words, even though we were actually expecting car sales to be weak, it looks like they actually came in stronger than expected in the retail sales report. Maybe that's good for Tesla. You've got electronics and appliances only at 0.2% here. That's pretty low. Building materials. We saw this in the PPI report that construction was really booming. And this would reiterate that this building materials explosion here of 2.2%. Food and beverages and grocery stores at 0.3 or 0.2%. Health and personal stores, 0. Gasoline stations coming in at negative 2.6%. Clothing at 0, sporting goods at 0.3, general merchandise 0.4, miscellaneous store and non-store retailers. These would be your online. Well, the bottom non-store retailers is online. Miscellaneous stores at negative 1%. So really, what was hot here? Well, what was hot was building materials and autos and auto dealers. We were expecting the auto numbers to come in soft, according to what the Bloomberg economists were expecting. But once again, they were wrong. The economists were once again wrong. Auto sales actually soared, apparently. That is quite interesting. We will. I'm trying to see if there's any commentary on this so far. So far, there is not. No commentary just yet, so we'll stay tuned for that. Okay, let's keep going through this. Okay, motor vehicle parts and dealers. Yeah, look at this. This is your let's see, current month percentage change, percent previous to current month. Previous to current month. Yeah, it's absolutely autos, actually furniture over here as well. We saw construction was up there. This is let's see here. This is the percent change. This is percent change advance. This is the advance. This is median standard error for percent change. I'm trying to see how this chart differs. Estimated measures of sampling variability and revisions. These are the revisions. Let's ignore this one for a moment. So we'll focus on this one, which gives us a more clear understanding. The revisions get a little funny to understand. So this gives us, in my opinion, some clearer data. How does this, though, compared to March? So rather than just looking from April to May, how are we looking if we look at March through May, just to get a little broader segment? The hotness is actually in the same area. Look at that. Autos, building materials are actually negative over here. So you have more variability. See, look at these changes here. Electronics and appliances were hot. Building materials were actually down. So it was really in this last month that autos reiterated heat. Same thing with the year over year that you got on autos over here. Autos, autos, autos. People just keep buying cars. What is this? And the expectation was that this would come in soft. Whoopsie daisy. Teslas are selling. Yeah. Used cars and shelters are lagging absurdly, and they know it. Quite possibly.